bank runs? They're complicated, so let's break it down. Look, a bank works like this. You give that bank $100,000 and they pay you interest on it. That's the expense to them. So how do they make money? They take a portion of your deposit, let's say 90%, $90,000 out of that $100,000, and they invest it in a long-term bond. Now, back in 2008, they invested in bad loans. Remember, you could walk and talk and get a mortgage, and a lot of those banks had bad loan investments on it. Now, sure, they invest in mortgage-backed securities, but they also invest in the 3-year treasury, the 10-year treasury. But there's a problem with that with our current economic circumstances. The problem, when they did some of those investments were paying like 2% interest. Well, right now, they're paying you as a consumer 2 to 3% just to house your money there. So already their spread, what they make off your deposit versus what they pay you, is eroding. It's going down. On top of that, if I had $100,000, I'm not gonna sit it in the bank making 2% interest. If you look at some of the short-term investments, like the 1-year treasury bill or the 2-year treasury bill, they're actually, those short-term investments, paying more money than long-term investment. For instance, let's say a 1-year treasury is paying you 4.25% return. Why the heck would I put my $100,000 in a savings account when it's only paying me 2% interest? It doesn't make sense. So banks are losing major deposits. On top of that, stimulus checks are gone, and let's face it right now, things are hard, so we're spending money. We're going on trips, we're going out to eat with our friends, we're buying more shoes, we're buying things and doing things that make us happy. Again, banks don't have as much money sitting there in their deposits. Now, the third thing that's transpiring is the Federal Reserve has raised prime rate, which is bank-to-bank lending, and they've raised it pretty doggone fast. So think of it like this. Prime rate is there to help the market with inflation, try to save inflation a little bit. So let's pretend I'm a medic and you're sick and we're on our way to the hospital, and I need to administer some life-saving medication. So I give you a shot. And instead of waiting to see how that shot does for you over the next 5-10 minutes, within 30 seconds, I give you another shot. And another one, and another one, and another one, and another one, another one, and now you've overdosed. Now I've killed you. We don't know it, but that could also be the case what the Federal Reserve is doing with prime rate. They are raising it so quickly. They're not giving it a moment to take into effect, where now we actually have a banking situation. So yes, Silicon Valley, which was the Silicon Bank, which was 97% business, that did hurt businesses. The Federal Reserve is stepping in. The government is stepping in. They have an action plan, but there can be more banks out there that are in the red. And so the government is sitting down behind closed doors and they're trying to figure it out. Really, the long and short of this is, don't panic. Don't go running to the bank when it's raining out here in California. Sit tight. Let's just see what takes place.